Welcome to another episode of Tank Talks, your personal think tank for all things startups and venture capital. I'm your host, Matt Cohen, founder and managing partner at Ripple Ventures. On today's show, we are talking about angel investing, the current venture landscape, and how the later stage investing world is being disrupted with partner at Craft Ventures, Bryan Rosenblatt. We dig into Bryan's operating background, working at companies like Twitter and Reddit, helping startups on the customer acquisition side, and how it helped him become a better angel investor in 2018. Bryan shares how he was able to score allocations in later stage companies like Lambda School, Slack, and Carta as an angel investor, and what tips newer investors can do to make their mark as an angel investor. Next, we dig into his transition to Craft Ventures, where he's working along some of the greatest investors of our generation like David Sachs, Bill Lee, and Jeff Fleur, and the lessons he's learned from just hanging around these guys. Lastly, we talk about Craft's playbook on bottom-up SaaS and how the firm is thinking about markets these days with all the capital sloshing around. But before we get started today, I wanted to share some exciting news for us at Tank Talks. Some of our listeners may know that I started my professional career at Royal Bank of Canada fresh out of college on the equity sales and trading desk back in 2007. My time at RBC, both in Toronto and down on Wall Street, New York, were instrumental in providing me with incredible opportunities in the capital markets industry. Now, several years later, I am proud to announce that Ripple Ventures and Tank Talks have partnered with RBCx to support visionary technology entrepreneurs across the US and Canada. With the recent launch of RBCx, founders and startups are now able to access a full-service platform to accelerate their entrepreneurial journey at every stage of growth. With not only access to innovative capital solutions, products, and services, the team at RBCx is offering solutions for technology clients across their entire company lifecycle, from inception to IPO and beyond. The amazing team, led by Sid Paquette, along with Nicole Kelly and Anthony Mouchantaf, are well known in the startup ecosystem, and we couldn't be more excited to partner with them on Tank Talks. Listeners of Tank Talks can get set up with an intro meeting with one of RBCx's team members by visiting rbcx.com and mentioning Tank Talks to get set up today. Now let's get into this week's episode with Bryan Rosenblatt from Craft Ventures. Thanks for joining us in the tank today, Bryan.
Yeah, thank you. Thanks for having me, Matt. Excited to finally be doing this.
Yeah, absolutely. And so am I. I'm really thrilled to have someone like you on the show because you have both strong operating experience and a tremendous background in investing in startups. You started your career working at firms like Reddit and Twitter and CBS Radio, helping small and large brands with their acquisition marketing strategies. So to kick things off, I'd love to ask you, what were some of the biggest lessons you learned from working with those brands when it came to acquiring customers that you didn't know before you started those roles?
Yeah, I think it was really interesting. I was able to work with a bunch of different brands. And what I found was when it comes to marketing, when it comes to acquiring customers, there's just not one set playbook for how to do it. It is very different based on the brand. And so I would work with brands like Peloton, Warby Parker, and Harry's. And what worked for Peloton didn't necessarily work for Warby Parker and vice versa. And so there is definitely an interesting balance of kind of art and science to the marketing. One of the things I noticed is some of the brands that did the best marketing had some of their smartest and most entrepreneurial and analytical people actually behind the marketing teams, especially today, like, Twitter and Google and Facebook. These are real-time auction and ad platforms. Things change so fast, constantly needs optimization. So it was definitely an interesting experience where, I think I came into marketing thinking like maybe there's a switch you turn marketing on and off. And that's totally not the case. It's a real muscle and skill to learn how to do it correctly.
Yeah, it's like you thought probably like the Mad Men era was still alive and well when you were working with advertisers and marketing departments, right?
Yeah, totally. And to a degree, some forms of advertising is still like that. There's a lot of advertisers that do brand advertising and marketing, and they just want to put up their logo and have people see it and call it a day. And as a salesperson, that's great. But more and more marketers want specific KPIs. They want to see sales and they're measuring it. And so you better make sure that the marketing is working. And so everyone's more accountable.
It sounds like you came in with a bit more of a qualitative mindset, and then you ended up with more of a quantitative mindset by the time you were done working with a lot of these brands. Is that correct?
Yeah, I was forced to. It's funny. So I started selling ads and working with brands like Under Armour and IKEA and doing these larger brand campaigns. And then when we worked with the emerging startups, like the Warby Parkers of the world, they were so focused on the numbers, and they would look at, for every $1,000 they spent, what are they getting? How many visits to the website? What's converting? and they would tell us more about what's working than we knew, and so it was super informative, and it forced us to do that.
Yeah, that's super interesting. And it kind of makes me think about why so many tech companies were way more prepared for working in a remote world over the last couple of years, because they didn't need to have like that FaceTime in the office to account for how hard someone was working, but they could just look at the quantitative data and what the output and productivity was. And it sounds like even in marketing and sales, like there are companies that were a bit more old school in the way that they looked at the ROI versus some of the newer emerging startups that were really focused on the data and the numbers, which is something you learned earlier on in your career, which is awesome. But I really want to understand, during your time at Reddit, you were in charge of building up the sales team in New York from 2015 to 2018. So what was that like, building out a sales team there? And how did that experience affect your views on how sales teams should actually be built?
Yeah, I mean, this was one of the most fun and rewarding, but also challenging things I've ever done. I joined Reddit as a senior sales rep, and I was in a WeWork with a couple of other people doing different things. And by the time I left, it was 100 plus people, mostly doing sales. And it was challenging because at the time, early on, the market didn't really take Reddit seriously as an ad platform. Brands, marketers, they were not raising their hands and rushing to spend money with us. And so we were constantly going out to market, educating them on why Reddit. And it was really hard because, agencies and marketers they were spending most of their money with Google and Facebook, and it was working. And so why take a risk with Reddit? And at the same time, we wanted to build out the ad platform. And so we were doing a ton of hiring, and, there were a lot of great salespeople at those companies like Google and Facebook doing great. And so to convince those folks to come over to Reddit and take that risk was really, really hard. But ultimately, it led to us bringing on folks that were sort of these true believers and had a lot of conviction in what Reddit could be. And they were sort of in build mode, and they wanted that challenge. And so it worked out really well where we built an original sales team of people that were just so kind of in it. And it was great.
It sounds like you were really able to hire people that bought into the vision and being Redditors, which is still true to even the way people have to recruit for startups today that maybe don't have as much capital or as much, brand recognition, trying to get people to buy into that vision, which is what makes probably you really great at picking great founders, which we'll get into on how they can sell their story and their vision to make sure people can come and work at their firms after leaving Google or Salesforce or something like that, right?
It was definitely, Reddit was, and it's one of these things where I was actually not a huge Reddit user. I sort of looked at it and I was like, this website is huge. There's so many people that are using it, but no one's really advertising on it. The website isn't really optimized. Like, it looks like it, was born in the early 90s and hasn't changed. And to me, that just screamed like opportunity. If they wanted to build a big business, like, there's an opportunity there. And so I was excited to do that. And I got to really go from someone who was skeptical of the platform to being an active user and seeing like why it made sense. And so it was, easier for me to talk to marketers who were not as sure about Reddit and salespeople who may not have heard of Reddit or used Reddit.
So you're saying you worked at Reddit, were not a really big user of Reddit, but you had to convince other people to advertise on it. And I assume it's because you saw how powerful the user base and the data was, but not because of how good the product was. Is that right?
In the very beginning, yes, but then I became a huge Reddit user, and I am now. So I kind of went through the stage of just understanding what Reddit was, but not really getting it. But then over time, working there, I'm kind of forced to learn Reddit, and I realized wow, I really love this platform. And I would find certain subreddits where I got so much value out of it. And I got, I had more conviction than almost anyone because I was a skeptic turned into a true believer, over time. And I realized if that happened to me, it could happen to a lot more, users.
It happened to me. I remember vividly still working on Wall Street, digging into Reddit in 2012. And it was really hard to find stuff. And it was pretty obscure, some pretty sketchy stuff that was being talked about on Reddit. But if you started to kind of look for that needle in the haystack, you would find some really interesting stuff.
I credit winning my fantasy football and baseball leagues to those subreddits because I had awesome data that was unique, that wasn't, on ESPN.com, and that extends to so many different categories.
Yeah, absolutely. And we can go down that rabbit hole in another podcast. But after working at Reddit, you worked with so many brands and so many startups that you decided to launch Riverside Ventures in 2018 to invest as an angel through SPV syndicates on AngelList. And you've got some pretty impressive names in your profile. You've backed companies like Bonobo, Citizen, Lambda School, Slack, Carta, and DocuSign. Firstly, how did you access these deals as an angel investor? And what stages were you writing checks into these companies, given you started in 2018 and a lot of these companies had already been around for a bit?
It was a combination. So some of those names were companies where I invested directly. I reached out to the founder, built relationships, got allocations. A couple of those, so like Bonobos, for example, I was just a huge fan of the brand and wanted to get in. And so I bought secondary shares, later stage. But, ultimately, like I was really hustling to get into these deals. So I come from a sales background. And I was definitely relying on some of those skills to reach out to founders, to get in, to add value. And so there was a lot of salesmanship, I would say, going into Twitter DMs and emails to these founders. And luckily, like had some founders like Lambda School, like Dapper Labs, like Citizen, agree to give me an allocation. And that was super helpful. But it was a lot of work. I mean, Citizen is a company. I mean, I knew I wanted to invest in for years. I had a relationship for a couple of years trying to get an allocation. I would help them with Reddit and community management, however I could help. I mean, I even went out like one night patrolling with the founder, testing new features, looking for different, areas of crime to actually beta test the app. And so ultimately I got an allocation, but it was years of kind of work to do that.
That's amazing. And I mean, I can totally resonate with that because I had a similar experience when I was trying to get into some, angel rounds when I was living in Boston with someone like the MIT and Harvard founders. And it was hard, like just being Matt Cohen at gmail.com wasn't going to work. And so for me, I had to create a brand of, myself, which was Ripple Ventures as a way to kind of go out and get founders to even trust me. But for you, like, you just decided to make checks through Riverside Ventures, but you must have been pretty early setting up some of the SPVs. What was the traction like and what was the uptake like from some of the LP community on AngelList?
Once I got into certain deals that were really interesting, so like Lambda School at the Series A, I invested directly into Carta. And so these were companies that people were familiar with. There was a lot of excitement around them, and there was brand name tier one venture funds leading these rounds. And so once I got into those companies and got access to it, frankly, I just had a ton of people come in and say, I want to invest in those companies. So at the time, it wasn't necessarily like we want to follow whatever Brian's doing, because I was still building a track record. It was, we want to invest alongside, Union Square Ventures and Sequoia. And I was just getting access to that. And it just kind of fed off each other. So deal after deal. And, once you get into one and two, you start to build kind of that credibility. And yeah, now the syndicate is really big. And there's someone, Alex Pattis, who's running it full time and kind of running with it and doing a great job there.
Wow, that's amazing. And it's such a testament to your sales efforts and your sales like hustle to be able to get into these rounds, and then other people just seeing that and saying, yeah, like, I know Brian is still early in his, angel investing career, but there's great firms leading these rounds. I just want to get access and Brian's my way in. So that makes total sense. But I got to ask, like, were you doing any due diligence besides with Citizen trying to like find crimes happening around the city?
Yeah, the diligence was totally different from what it is, now full time at Craft. So, being a smaller investor trying to squeeze my way into competitive rounds, like the founders were not giving me necessarily access to data rooms, nor was I really equipped to handle like a full on data room, just being by myself like that. So it was a lot of, investing alongside credible leads, but I was definitely doing diligence, whether it was kind of talking back channel to customers or being a user of the product and that sort of thing.
Yeah, I think at that stage too, like, you're not going to find something in the data room that hopefully the lead investor who's got a track record hasn't seen already, which is definitely true as an angel investor. I think more at the earliest stages, like the kind of pre-seed seed stage, you would want someone who is writing a meaningful check as an angel to do some more due diligence.
Totally. I've always felt like I was a good kind of judge of character and a good picker of people. So hiring people for different roles and like assessing out if it's a good culture fit or this person's going to be really exceptional at a certain skill set. And so I did that at Reddit, and, with early stage investing, it was similar in that I was picking founders. And so, something that I thought I was good at. I also learned a lot of lessons, good and bad along the way, but over time, making those investments, seeing what, going over mistakes and also things that were the right decisions was able to kind of help me kind of moving forward.
Yeah, having losses as an angel investor is probably the best MBA you can get before taking on institutional capital to invest. Yeah.
Totally. I'm so thankful that I, was able to write as many small checks as I did early on and learn lessons, because those lessons didn't cost as much as if I was at an institutional fund making those. And so by the time I'm at Craft, I have, 3+ years of angel investments, and I'm in, tons of companies, and I've, have that track record and history of kind of learning. So, and by the way, like when I was doing angel investing, I kind of saw it as my MBA. I was like, well, I'm going to put this money, which is more money than a financial advisor would recommend that I invest in startups, but I'm going to do it because I'm going to build a track record. I'm going to figure out if I like this, if I'm any good at it. And like, that's going to be a better MBA than me going to it, sitting in the classroom. And I feel strongly that was the case.
100%. I mean, I would say like, 60-40 bond portfolio, like I would say I was like 70 startups, 30% equities, zero bonds.
Oh my God. I was I remember before I got married, my fiance was like, what are you, how much money do you have in startups? Like, why don't you have, cash in the, and I was just, and that's also another reason what drew me to syndicates is I could only write so many personal checks. I needed to raise outside capital.
Yeah. So two last questions before we move on to the craft stuff. So one, what was the biggest lesson you learned as maybe an angel from like a loss that you still carry with you today? And two, what has been the biggest win as an angel from the SPV side that you did?
I mean, I think the biggest mistake I made was falling in love with an idea or a premise or a type of business that I want to exist. That's something that maybe I would go start on my own or work for. Finding that business and just being so excited to contribute and to see that, idea that I would invest prior to really, really getting conviction that it was the right team necessarily. And at the end of the day, like it's all about the founders. It's all about the team. Like it could be the best idea in the world, but you need the right people. And so I think getting too excited about an idea or a vision and investing in that versus the team or the actual like product and traction, that was probably the biggest lesson I learned. And, investing is, a lot of it is, especially at the early stages, is emotional, and there is a lot of storytelling, and we have to be really careful to just like invest in storylines and narratives. That's the biggest thing. I'd say the biggest wins are probably still on paper. So Carta and Citizen, Dapper Labs is another one, invested early in that just had a huge couple of rounds valued at I think like a $6 or $7 billion valuation. I've had one, and the stuff takes time. I had one recent exit where investors got paid back around 30x their original investment, and in a pre-seed seed stage company that people probably haven't really heard of, but did really well.
That's awesome. Man, that's amazing. Yeah, we know Roham Gargazu well. He's an LP in our fund, just like you guys are at Craft, and obviously co-investors on the board with him at ZenHub. So that's an amazing one. That lesson, though, really resonates with me because it's kind of a mind fuck for an angel investor who thinks like every idea that they understand is a great idea. But that's not really the case when it comes to venture investing. It's actually the opposite. It's something that you shouldn't understand very well, that some founders really good at explaining to you, and they're really good at explaining to future investors and future hires is actually more important. So I completely agree. Like ideas are a dime a dozen. Execution is a totally another level, but a founder who has something special that you have never seen before that really just sticks out is almost the better top choice of what you should be looking for at the earliest stages.
Absolutely. And to go on to another mistake is like sometimes passing on deals where I just, couldn't get my head around what the founder was doing or wasn't an expert in it, but something in my gut was screaming, invest in this founder. Like you want to be in business with this person, not doing it because there's a lot of good reasons to not do it, and then regretting it. And so there's, also just those lessons kind of, I think, help train your gut instincts and like listen, as long as your instincts are getting stronger and stronger over time, I think that's what makes a really good investor. And mine, I continue to learn lessons every day. Absolutely.
Yeah, for sure. I think one of my favorite passes that I still come back to all the time, which was an angel list deal that I found early on in like 2013, 14 was All Trails. I met the CEO. I loved what they were building, but I didn't understand community building at all. I never understood the power of community. and how you can make a business out of that. And sure enough, I was wrong. And they just did a massive round recently as well. And I'm a huge power user of the product still today, which kills me even more every time I sign on to it, but always learning from those lessons. So you joined Kraft at the end of 2018 to help build out their New York team and have been recently promoted to partner. So joining an incredible firm like Kraft with guys like David Sachs, Bill Lee, and Jeff Fleur, who have all had massive exits as founders themselves, not to mention an incredible angel portfolio of companies like Uber, Facebook, Slack, Tesla, and SpaceX, and Airbnb, but also just legends in their own right, must have been pretty exciting, but also very daunting as an angel investor. So what were some of the challenges you faced getting up to speed on investing alongside guys like Sachs in a traditional venture fund instead of just angel investing by yourself?
Yeah, well, the reason I joined Kraft was so that I could work alongside people like David, Bill, and Jeff. I really wanted to learn from people who not only had a very successful operating track record of building companies, but I also wanted to learn from people that were good investors. There's always that argument of who makes a better investor, like former founders and operators or career investors. And I don't know that there's a right or a wrong, but I do know that I'd love to have both. And that's exactly what they have. And so learning from them, again, I want to learn from people that when they tell me I'm being stupid, I listen. And so that's certainly the case. It's been fun, and because the amount that I'd say like business school when I was angel investing and learning that way was one side of it, but then learning alongside people like this, sitting on boards with them is a whole nother. And so David being an expert in SaaS, learning about bottom-up SaaS investments and what works and what doesn't and different strategies, and Jeff with marketplaces, given he found StubHub. I mean, it's I become experts on that just by sitting kind of to the side of them on these boards and working with these companies.
I mean, being a fly on the wall on those early days and just soaking it all in must have been absolutely incredible. Were there any sort of big aha moments that you saw David or Jeff or Bill do in a board meeting or in a couple early meetings with founders that you just didn't catch? And you're like, how did they even think about that? Because I always say some of the smartest people in the room are the ones who are always listening and not talking. And I feel like they also are really good at that. So what were some of those things that you saw early on?
I think that's actually a really important point, is listening and contributing, but not, focusing on what's most important. So I'd say a couple of things. One is, when to be more aggressive and also when to kind of slow down. And so we've talked a lot about, not going off the rails, raising a big round, not overspending or spending on things that don't work or have real ROI. So just keeping kind of our businesses and founders and teams in check, that we're not overspending and getting kind of too crazy. But at the same time, being able to push founders and teams where we feel like maybe we're not being aggressive enough. That's been something that I found to be really interesting, because I think some investors and some people tend to be like one or the other, too conservative or too aggressive. And something I've found with Kraft is I've seen us kind of do both, depending on the situation, depending on the market and that sort of thing. So I think that's been really helpful. And the other piece is just we've been in a lot of those folks' shoes. And so being able to be a resource for when they're going through whatever it is and needing advice, and being available to pick up the phone has been huge. Yeah,
that's really interesting. It's like sometimes founders are almost too careful when they don't really have clear vision to see the ROI, because this is maybe their only one shot at hitting it big and they don't want to fuck it up. But you're there kind of in their course saying, no, there is something here. You just haven't actually seen this happen before. But from our experiences, this is exactly when you triple down. This is when you start to press the gas down, which is really important to have investors like that on your cap table and on your board, which is why, David is so good at the bottoms up SaaS. Now, given you don't have a technical background per se, what was the hardest thing you had to learn when you transitioned to venture investing?
Yeah, well, I mean, clearly it's easier for me to assess a founder or executive who come from more of a go-to-market or sales or marketing background than a technical one. But, I'm aware of that. And so we have a whole team, and when we look at deals, it's not like it's just one person. We all work together as a team. If there's a company or founder where I could use, a partner's point of view, we'll bring folks in. And so the entire team has different expertise. And so we have folks who are highly technical and engineers, folks who are more business and marketing, folks who have invested in specific segments. And so I think it's really just kind of about checking ego at the door, bringing in the right people to help assess a company. But, we don't necessarily need to be absolute experts in everything we invest in. To your point earlier, we are taking some leap of faith. We are betting on founders to a degree here.
Yeah, I totally agree with that. And like, I'm not an expert in AI or ML, but we have experts on our team and we have people we can call on. And I just tweeted about this the other day, like knowing when you're not the smartest in the room and asking for help is one of the best soft skills that's not really talked about. Since investing at Craft, how has investing in SaaS companies from a traction and metric standpoint changed in your eyes? And how have companies also stayed the same in your opinion?
It's gotten a lot more aggressive over the last few years, especially for SaaS companies. I think investors in the public markets and private markets have kind of woken up to how exceptional SaaS businesses are and recurring revenue and SaaS margins. So it's gotten more competitive, and basically the multiples have just gotten a lot higher. So multiples that we were paying for startups 2 years ago, 3 years ago, I remember at times feeling like, wow, this is kind of high. Now looking back, if we could get that deal, that would be an incredible deal. And so it's gotten a lot more aggressive, and that's kind of the reality of the business. So that's one thing. The other thing is I think folks are going earlier. And so I think Series A's are happening earlier from an ARR standpoint than they were a couple of years ago. What hasn't changed, at least for us, and I think for others, is just how sensitive we are to growth rate. Like growing fast is extremely important. And so it's not as simple as if you're at, X ARR run rate, you get a 20x or a 50x or 100x multiple. Your growth rate really matters a lot. And so that piece has not changed in terms of like importance.
I don't think it's changed, but it's definitely become more important and more focus for a lot of investors, especially the early stage, because everyone's saying like, okay, I'm paying 100 times ARR now, but because they're growing at 100% month over month, I'm really only paying like 25 times or 35 times for forward earnings next year if they can keep that up. We had one of your companies on the podcast several months ago, Shanuk Amin from Snack Magic. That's an incredible story of someone who's gone from 0 to 20 million ARR in 8 months, and like that growth is phenomenal. And I'm sure maybe when you were paying for it at the time, you're like, this is crazy, but then keep going 6 months out and you're like, this is great. So I think it's a bit of a mind change for a lot of investors these days, hasn't it?
That's exactly right. And so you need to have the conviction that growth is going to continue. And yeah, because listen, if the growth doesn't continue, then all of a sudden it's not a good situation, and things can change fast. So, that's why when we invest in these companies, we are doing a lot of diligence, to get conviction that growth is going to potentially accelerate or continue. Because it's, growth is not a given. Just because something's growing 20% month over month doesn't mean it's going to be like that next month or next year. And so we do a lot of different things to try to make sure we feel confident that growth will continue. But you're right. Investors are paying forward and giving credit to entrepreneurs and founders for revenue that doesn't exist today, but we believe will exist soon.
Yeah, it's really important for founders to also understand how you're analyzing their growth pipelines, not the way that they're maybe building out their CRM and their forecast, right?
Yeah, absolutely. We actually kind of built a template in-house of how we analyze SaaS companies, and we actually just made it public. The product's called SaaSgrid, the website SaaSgridQA.com, and SaaS founders could go in and like plug in their numbers and kind of see the numbers and the data that we look at, how we analyze companies, and we kind of benchmark the different categories of growth and ARR and revenue retention and all that type of stuff. But it's fairly templatized for SaaS businesses. So we just actually launched that a few weeks ago, or maybe it's a month now, and that's been really helpful for founders.
Yeah, we loved it. SaaSgrid was great. Thank you for sharing that publicly. We've actually got a bunch of our companies using it now. So I really do appreciate you guys sharing that. Given your background in leading partnerships at firms like Twitter, how do you help founders establish and manage partnerships as an early stage startup with a SaaS or marketplace business model?
So, I mean, I like spending time there because it's something I know. The truth is, first of all, I think it depending on the business, like partnerships may or may not make sense. I think some SaaS companies fall into a trap of focusing on partnerships too early when like they really just need to focus on product and selling. And so, the first thing is just making sure that it makes sense for them to focus on that. We've invested heavily in a platform team, and we've created an executive briefing center where we actually have someone who full time is going out and bringing in C-level executives and decision makers into Craft, and then bringing our portfolio companies and setting up meetings with them. And so we're actually like hands-on helping with that. But, at the earliest stages, I think just in terms of structuring like those partnerships teams, helping with hiring, finding those people, those are things I could be hands-on on. So that's kind of where we spend time.
Yeah, I definitely love how you guys built out those different sections of your team to help on specific issues, because a lot of early stage companies struggle with managing partnerships. Either they swallow their company whole and they take on all the resources from their engineering and their customer success teams, or they just screw up in negotiating them from the start, and then it ends up crushing them as well. So it's a very important thing to consider if it's the right time, the right stage of your product and your sales cycle. So having investors like you to kind of coach them along makes a lot of sense. I got to ask though, you've made investments in companies like Pipe, which help SaaS companies monetize their ARR contracts in order to not need growth capital at the later stage. Do you think it is going to destroy the VC model for growth stage funds? Are they completely fucked because of Pipe? Because Sachs has talked about it before, but you guys have invested in it, and you have a growth fund now.
Yeah, we're really bullish on them. Obviously, we led their seed round and continue to be really excited about them. They are crushing it, and that's great. Listen, I think today we've been more focused on kind of investing at the earliest stages, which is really historically where we've been. And I think startups and founders are going to still really benefit, from former founders, from operators, from specialists as it relates to company building. I do think it's a better question, as you kind of alluded to, of like growth capital, which at that point, like these companies have found product market fit. Maybe they don't need as much expertise. It's more about just getting money. And so, yeah, listen, if I was a growth stage fund and the value you were bringing was just money, I would be nervous. This is sort of a reason why we're making heavy investments in our platform team and having operators on our end. So it's something clearly to think about in the market.
I agree. We get calls all the time from some of these growth stage funds looking at our portfolio, and I'm like, aren't you like 4 rounds later than where we invest? But I think they have to go upstream because of situations like Pipe getting in the mix and giving funding, when you're right, the value is not much more than just the capital that they put on the table. So I'm glad to hear you say that as well. Given Craft is so good at bottoms up SaaS investing, what are some of your best tips for founders who are focused on product-led growth strategies as a pre-seed or seed stage startup?
It's all about the product. It's always about the product, but especially with bottom-up SaaS, product-led growth. We're talking about companies where growth is really built into the product. The product needs to be exceptional, because these companies, oftentimes it's like self-serve onboarding. The product needs to be so good, the onboarding needs to be so smooth that someone can get onboarded, figure out why this is valuable, and then want to share it with folks. And so that takes time to build. And so we really, push founders early to just get the product right. In terms of like getting the product right, a big piece of that is making sure you have the infrastructure to get feedback early and fast, because you're building product, shipping product, but then you need to iterate quickly and get feedback. And so, there's different ways of going about it. But for example, there's a early stage, seed stage startup that's in stealth right now, and Craft is using the product, and we're using it daily, and we're giving feedback to the founder of what we like, what we don't like. And the fact that the founder has us doing that is, I think, a huge value add to them, because we've kind of agreed to use it, and we're giving actionable, real feedback, good and bad and constructive. And I think as a result, they're going to build a much better product prior to going to market. So really finding a way to get that feedback is huge.
Yeah, we always tell companies, if you're selling to like consumers, you need like 1,000 users to be able to get good feedback. If you're selling to like SMB, you need like 50 to 100. If you're selling to enterprise, you need like 5 to 10 or something to try and get that feedback honed in. But do you think there's a way to go about it where you can do sort of like the hand-holding feedback, like the superhuman type of model, where it's like you hand-hold people onto the platform, get them to see the aha moment right away through somebody onboarding them, and then let them run with it? Because there's a saying, like, if you let people just run wild on your product too early, it may just be really confusing. You may get the wrong signals on what you actually should be fixing or building. Do you have an opinion on that?
In the case of Superhuman, like it's clearly worked for them, and I think it makes sense for that product. I mean, in an ideal world, you can self onboard and you kind of get it, and there's a really short time the product delivers value really fast to the user. But some products it's really hard to do that. And so something like email, where we're all used to using it, I mean, that may require some more handholding. But I think, that they're taking learnings and learning how could they scale it and make it more self-serve. So anyway, I'm not totally against it, but in an ideal world, the easier it is for a user to self-sign up and onboard and get going with the product, the better. But yes, there are going to be some products where you kind of need that human interaction, but over time you want to build as much tech into it as possible.
No, I totally agree. It's not really scalable once you have so many customer success people trying to, bottleneck the inbound funnel on onboarding. So I totally get it. Any companies in Craft's portfolio at the early pre-seed stage that have just like crushed product-led growth, strategies that you always like kind of refer to?
Well, ClickUp is one of those. I mean, we invested early. They're not early anymore, but they've grown so super fast as a result of kind of their PLG strategies. And, they've done a great job with building a community. They have an active Facebook community where people are helping each other. They have folks they're not affiliated with ClickUp, but their whole business is actually helping and advising folks on their ClickUp instances. And so they have these coaches and advisors that have been really interesting to see. An earlier stage company, though, Scratchpad is one. They've been doing an incredible job of kind of growing through word of mouth and bottom up adoption. Basically they make it way easier for sales reps and managers to update their Salesforce instances, take notes, and that sort of thing. And AEs love them. And when an AE starts using it, they bubble it up to their other AEs and to sales managers. And we've seen it just sort of go viral within companies and within orgs, and people on LinkedIn posting and talking and bragging about it. And so that's been a super fun one to watch.
Yeah, those are two great examples. Thanks for sharing those. You mentioned the SaaS grid going public and making it available for people and startups to actually use. Craft has built an incredible platform for founders to leverage. And your SaaS playbooks are game changers for founders. So what part of the Craft platform have you seen become a true value add to founders, especially at the earliest stages of company building, that you would recommend every founder look at?
Yeah, this has been a huge area of investment for us, especially with this newer, larger fund. We have full-time operating partners on recruiting, communications and PR, marketing, community, BD, government relations, legal. I'd say that the two things that are being leveraged a lot by our founders right now, and we're just seeing incredible impact, is our recruiting team. I mean, recruiting it has been, and it continues to be the number one ask from the portfolio companies. We've really tripled down on what that means. And so we have a head of recruiting and operating partner there, but we're actually hiring and have full-time recruiters who are going in and helping source candidates. So really helping to do the work. And we're continuing to invest and build out that team. And so that's probably been the number one thing. The other piece I mentioned before, the executive briefing center, we're bringing these C-level decision makers, connecting them with our companies and setting up really high quality meetings. And so our companies that have participated in that have seen a lot of success and some deals to be announced soon from that.
I love that. That's amazing. Just making it all happen behind the scenes is so important for founders, which is why they always pick you guys as their partners on the next rounds. Your team just announced its Fund 3 and its first growth fund in August with $1.1 billion raised across both vehicles to continue investing in SaaS and marketplaces. I got to ask, given the ability to invest at both the early stage and now the later stage, how are you guys thinking about the venture market with so many public and later stage investors racing into the early stage rounds of investing?
Yeah, I mean, well, it's certainly gotten more competitive. I think the biggest thing is it does force investors to move really, really fast, faster than they've ever moved before. There's not really time for 2 or 3 weeks of diligence and waiting for next week for the partnership meeting. You need to move fast. I think the other thing, this has always been important, but now it's required, is you need to find these companies and start building relationships with founders earlier than ever. Because like you said, these bigger funds are going earlier and they have the pockets to just do the rest of their rounds. So folks have to move faster. You have to invest earlier, and that's happening. And I mean, craft has always moved fast, and we continue to move really fast with founders. And we also are really proactive about getting to know founders early. And so we've been actively investing in seed and continue to do that. Ultimately, like, I think this is a great thing for founders. They get to have more than less options, when choosing who to take money from. And they get the chance to pick the right partner and the right firm for them. I think ultimately it's a great thing. It does force people to kind of change their game, but it's one that I feel like we're well equipped to handle.
Yeah. And I can say firsthand, like, you guys do move very fast. You guys move very fast when we, showed you the voice flow opportunity. And it was great to have you guys come along and co-invest with there. And also just having the ability to work with you guys as LPs in our fund has been awesome. And we're really excited to find more opportunities to hopefully collaborate and work on together in the future. Before we wrap things up, we always like to ask our guests for their fast favorites. I list off 6 categories. You name your favorite of each. So first is your favorite podcast.
The All In podcast.
Oh my God. I knew you were going to say that.
It's the truth though. It's actually the truth.
I know. It's my favorite. It's my favorite too. It's amazing. Are you like a Saturday morning listener, or when do you get into it?
Friday night when it drops, or Saturday or Sunday over like morning coffee.
And how many yachts have you been on with Sachs? None.
Maybe one.
Maybe one. Okay. Favorite newsletter or blog?
Tie between Fred Wilson's daily blog and Howard Lindson's blog. I think that I love what they do and mix kind of personal stuff with business and the markets, and I've been longtime subscribers.
Nice. I guess I should have thrown in like, what's your favorite Reddit subthread, but maybe for the next one. Do you have any of your what's your favorite? Probably fantasy football or something.
I mean, right now it's the New York Mets subreddit because I'm a huge Mets fan, and they're doing great things in the off season, and so it's for that right now.
How funny is Steve Cohen's Twitter thread though?
He's incredible. He's amazing, and I'm thrilled he's the owner.
Do you think he's the one tweeting those, or do you think someone else is doing it?
I think it's definitely him, and yeah, I think it's great.
I love it. Okay, favorite tech gadget?
It's in my Quest, so I've been playing around with some VR.
Nice. Me too. I have it actually in my room right now. Favorite new trend?
Investing in alternative assets like sports cards. So I big sports card guy, and it's been cool to see like investors coming into it, and it's now more socially acceptable for me to spend money on sports cards. So that's been fun.
Your wife is accepting it more. Okay, that's good.
I didn't say that part, but she's getting there.
She's coming around. We had Rob Petrozo on the podcast before from Rally Road, and that's an incredible story as well.
Oh yeah.
Favorite book?
Thinking in Bets by Annie Duke. Really like that one.
Awesome. And last but not least, your favorite life lesson?
I'd say stay hungry, stay humble. I think just the idea of like staying motivated and hungry, but always kind of being grounded and being humble is really important to me and are the type of people I like to associate with. So
I like that one. It's like the people you see on the way up are the same people you see on the way down. So be careful and be nice to everyone on the way up, because you never know when you're going to see them again.
Yeah, totally.
Awesome. Well, this has been great. Thank you so much for joining us in the tank today, Brian, to discuss SaaS and marketplaces and the current investing landscape, and also as an angel investor with Bryan Rosenblatt, partner at Craft Ventures.
Thanks for having me.
Thanks for listening to another episode of Tank Talks. To learn more about this episode, be sure to go to Apple Podcast or Spotify to find more detailed notes on this episode or to check out previous episodes. Also, if you enjoyed this episode, please leave us a review and a rating, as it helps us out a lot. And hit that subscribe button so you can get notified when new episodes come out. Finally, make sure to give me a follow on Twitter at Matty B. Cohen or at Tank Talk Podcast to stay up to date on new episodes or to be a guest on our show. Till next time,